we've been reporting, the European Central Bank threw a lifeline to banks in Europe. Today, hundreds of them have signed up for 3-year low-cost loans. Now, the ECB is lending more than $600 billion to keep credit flowing to the economy, to the financial institutions. With us now is Matt McCormick, a banking analyst and portfolio manager at Bahl and Gaynor. And Matt, I know you've been looking carefully at the financials. The whole idea is that this is going to help jumpstart the economy because credit will flow through, lending will be restarted. Is that going to happen now?
Margaret, I don't think so. I think you're looking at essentially the European version of our TARP plan. It's only about $100 and so billion less in terms of dollars, but I think the results are going to be the same. You have a short-term reaction, which the market has already digested, saying, okay, we see liquidity answered, but not the real deeper issues of too much government debt, unstable economies, as well as is this a big enough financial backstop to really shore up the financial system? And their conclusion is the answer is no. And I think the market really now is saying this highlights the issues of the roughly 523 European banks that need this money. And I think what it really signifies, I think, to investors is that we're really in about the 4th or 5th inning of this European mess, where there's going to be more volatility, not less, that more and more banks are going to come to this type of facility or others demanding more liquidity. We've seen this move before. We saw it happen in TARP. The bank shares went up and then they went down. You saw more liquidity come into the market and essentially a risk-on trade occurred, and then the market went down. We're seeing it happen again, and I cannot be optimistic about the future for European banks.
Well, as you just said, you don't expect this to help lending. Will it also help vacuum up some of the sovereign debt? The other initial reaction was, oh, now banks have this money, therefore they have incentive to get higher yield, therefore they'll buy the debt no one else wants to right now. The countries you're worried about, the Spains, the Italys, are you going to see them do that?
I think you're seeing a lot of banks that have been shedding their sovereign debt exposure. I don't see why they would want to add more to it. I think that's another issue where, there is a huge demand for yield, but on the other hand, the EU, the Fed, and other officials are saying, watch the amount of risk you take on adding to your balance sheet of about illiquid sovereign debt. So I can't really see people, if I'm a CFO or CEO of a bank, saying, I'm going to add more toxic assets to my balance sheet. I'd say, no way.
Particularly when you have new rules coming through with Bahl, new capital requirements. How are banks going to use this money?
I think they're going to hoard the cash. When you look at what's happening here, whether it be in Europe or in the U.S., the higher capital ratios from Basel III and what the Fed has announced is you're going to see more and more banks say, I need to keep the capital high. I'm going to watch my lending. I'm going to watch my future dividend increases, and I'm going to basically hoard it. And I think people are trying to equate higher capital ratios with safety. And I don't believe that, because if you look at a European bank like Dexia, had one of the highest capital ratios amongst its peers, and that was before it was nationalized by Belgium and France. So I think you look at a situation that higher capital, in theory, helps people calm their nerves, but in reality is not a bomb that really solves a lot of issues. It's going to be something that you have to understand that we're going to grind this out. It's going to take years, not months. There are no short-term solutions. And from an investment standpoint, I keep reiterating this point, you don't have to own the European banks. You don't have to own the money center banks. There's other areas where your capital could be treated better. Why not move there?
All right. Thank you very much.